Hey everyone, hope you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in, take a look, and see what people are sharing. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all of these topics that we are discussing, trying to find investment opportunities. Starting with North Star, capital rotation. And I know I've gone over this a couple of times, and I will continue to go over this and give you guys updates as he updates this. So this is capital rotation. Gold should rise to 8,000 or more by 2028. Silver should easily achieve $100, maybe a lot more. And stock markets could potentially fall 50% or more over a 12 to 24 month period. So what are we looking at here? This is the Dow to gold ratio. There's been a few times in history where this ratio has turned 1, 2, 3, and now we're on our fourth capital rotation. Each of these rotations align very well with the real estate cycle. The 1930s down here, this one's a little bit of a different mix, I would say back here. They revalued gold upwards, which basically revalued everything in the commodity complex higher. This one here was in the 1960s and 70s. That was your big monetary expansion of real estate. A lot of credit was growing there. We also had supply tightness in oil and some other commodities. Gold went off. We went off the gold standard in this general area too, and gold was revalued higher along with all of the commodities. Then we've got the other rotation in the early 2000s. The peak bottom was in 1998. 98, 99 was the bottom if you were so lucky to buy that bottom and rode it all the way to 2011 or 2008, depending on which commodities you were in. You made ridiculous sums of money, especially in the equities. Some of the equities went up 20 to 1,000%. Or no, sorry, 20 to 1,000 times, not percent, times your money from bottom to top, depending on what companies you selected and the sectors and how those companies went through the Lassonde curve. Some went from exploration to production and got ridiculous returns. We are now entering that period again. We're starting to break down where gold is starting to outperform the Dow Jones. And a lot of people kept saying, well, where's this super cycle, Andy? I'm like, guys, it started in 2020. You're going to get pullbacks along the way. The bigger pullbacks generally occur in the beginning of the cycle. That is the disbelief phase. Everyone was in disbelief. Maybe not everyone. I wasn't, and there are a few others that follow cycles that are not in disbelief, but the majority are in disbelief. They do not believe they move. They get scared on the big pullbacks, and the big pullbacks generally occur here early in the cycle. They accelerate mid-cycle. You can see the big moves coming on down. We are, I think, at the beginning of what could be a big move. That big move transpires by the Dow going down and gold going up. And in those market conditions, we see commodity bull markets. That is the super cycle. Super cycle, super cycle, super cycle. And we are going to enter, in my opinion, another super cycle. So he says the red capital rotation events lead to stock markets rising for many years and precious metals entering prolonged bear markets, the red ones on the bottom. The green ones at the top, so the green capital rotation events lead to stock markets falling 50 to 80% and taking a decade or more to recover those losses. Whilst gold and silver rise hundreds of percents. And that's also when oil and all the other commodities go ballistic goose. Tavi, so let's start looking at a lot of these. We're going to see a lot of evidence of that rotation. That's why I started with the rotation one, and we'll go through and we're going to see evidence of all of these things starting to turn. What does that mean? It means that we are starting the bull market. That's what it means for a lot of these equities. They're bottoming out. They're starting to break down trends. They're putting in bottoming patterns. It means that we are at the beginning of a big investment opportunity. And that is where, as investors, you want to get in early. You want to get in super early. And I'm going to give a talk about risk reward. Well, maybe more about risk than reward, but risk. And somebody asked me about 100 baggers. This is where you go hunting for 100 baggers. And 100 baggers is a lot, guys. I mean, you are pushing your bets there. But 10 times, 20 times, 30 times, 40 times, there could be a few 100 plus X returns if you can catch the absolute bottom and be able to ride through a lot of nasty pullbacks. Believe me, I have ridden through quite a few pullbacks on the ones that I am up currently above 10x. And I've got about 10 plus. I have a little bit, like, I think it's around 10 that I've got. Some of them are fluctuating in and out of 10 baggers in uranium. They're starting to come back into 10 bag status. And that would be, 10 baggerman, if you guys know what that is. But yeah, so here is the gold to stocks S&P 500 ratio. It says this is very intriguing. Gold stocks are starting to gain traction, particularly compared to the broader market. More importantly, the gold equities to S&P 500 ratio is breaking out from a key support level that has been in place since 2011. 2011 was the bottom of the technology market and a recovery phase of real estate. When there's a shift from one end of the spectrum of views and positioning to the opposite side, that's often where significant opportunities arise, in my view. He's completely right. You can see that we bottomed somewhere in about 2023, 2024. It depends on the equities themselves. They don't all bottom at the same time. Some of the equities that I got in, say, some of the silver junior companies bottomed in 2023. In particular, September of 2023, and I actually got the exact bottom tick of it. And it was lucky. I was cost averaging in, but some of those cost averages were dang near the bottom. We're talking within a penny. And it is luck. It is luck to some degree to get it that close. Others are bottoming now, depending on if they're explorers and stuff like that. But overall, gold stocks are starting to bottom and break out of the downtrend and start a new uptrend. That also coincides with the one above it. This capital rotation coming down, where gold's about to outperform the Dow. So these are starting to break out against the S&P 500, the equities themselves, the miners and stuff. That's the opportunity. And we're also coming from, look at just, don't worry about the scale on the y-axis here. Just look at where we were in 2011 and then where we are today and the gap between the two. The way that this closes, that gap, is gold stocks will outperform and the S&P 500 will underperform. It's a combination of those two things. And that's what we're looking for. We're looking for what is outperforming what. In the future, if we go back somewhere to this level up here, we have an asset that can buy more S&P 500 shares. So that is the basis of earning more purchasing power in the S&P 500, earning more purchasing power in another commodity, earning more purchasing power against homes or whatever it is that you're measuring against. It says finding value. Okay, that's, yeah, obviously myself, but silver in priced in Great British Pound and the Japanese yen. You can see these big breakouts here of silver in other currencies. Sometimes you want to check other currencies. This is in the yen. It's breaking out. Obviously, I'm going to show a couple in the United States dollar later on. But silver's breaking against all these different currencies. That's exactly what we want to see. An outperformance against all the other currencies, and silver is looking fantastic. These are the ETFs versus the commodities themselves. So when we start entering these capital rotation periods, that is when we want to see the ETFs or the miners start to outperform the commodity itself. So when we look at GDXJ and SILJ, this is what we see against the commodity. This is SILJ versus silver. Big, huge outperformance in 2016. Huge move. We've consolidated all the way back to a bottom. This is considered what my opinion is a double bottom in the ratio. We've broken the downtrend line. and we've got a lot of green candlesticks. Notice the big green candlesticks in this corner here for 2023, middle of 23 and onward. I call that the green army showing up. You can see that the green army, they're sparse in here, didn't really show up. We tried a little bit in 2019, 2020, but then we just kept coming, falling, falling, falling. It's starting to show up. It's grouping together here, and I think we're going to see a breakout to the upside where the mining companies are going to start to outperform. GDXJ has also broken its downtrend against gold itself. We are at incredibly low levels down here. On the website, we purchased all of this area over here. We cost averaged in 23, 24. The ultimate bottom was 2022 for gold itself. Gold started to ramp up at a faster pace than GDXJ did, and your entry opportunities were all through here. There are individual companies that were putting in double bottoms and all of those things. We grabbed some of those shares across the board, and now we're going to see, I think, a big outperformance. And I hope everyone has the ability to hold on to those shares. Gap fill complete for natural gas after it plunged 25% over the last 2 weeks. So a big plunge there, and there's the gap fill. So maybe we could start to firm up a little bit in that gas going forward here. Coming down, Gary Savage says the ballistic phase has begun. He's talking about silver. $37 to $40 is very likely, and there's a scenario where silver could hit 50. Cover this in detail in his weekend report. I've got some other ratios about the capital rotation, staying on the theme there. Nasdaq to XOP, Nasdaq to GDXJ, and Nasdaq to SILJ. So this is Nasdaq versus XOP, which is a oil and natural gas exploration production ETF. Big outperformance. So the ultimate bottom, if you know cycle analysis, if you look at real estate cycle and all these things, the ultimate bottom was 2009 when the fear was maxed out. That is when you want to go long in technology. It's the recovery phase of real estate. And you can see that we went sideways for a couple of years. We went sideways from about 2010 into 2015. So 5 years sideways, and then it just exploded on the last section here. In 2020, we hit a bottom where energy companies had bottomed against the NASDAQ and started to outperform. We went into a consolidation here, an upward rising wedge consolidation, and I think this is going to break lower, where energy is going to start to outperform the NASDAQ again. That's where I think we're at. We also have the NASDAQ versus GDXJ. You can see we've got a rising wedge going on, and we're about to break to the downside here at any second for GDXJ to start to outperform. That is that capital rotation. They're all in alignment with this, and that's the herd. So the herd, the psychology of the herd, when the herd is subjected to certain market conditions, those market conditions could be increasing interest rates, high inflation, whatever it is. That is when this starts to rotate. And then the patterns match what the herd is subjected to. And we're going to start to fall where GDXJ starts to outperform. So when you look at all of this, when I go and I show you other ratios, they're all interconnected. They're all tied together. And that's where we get our entry points. Now, identifying the opportunity in the macro is one thing. Choosing the vehicles of how to play it is another. Because I tend to go after the really leveraged stuff that has a high probability of success. There's some ingredients in there. I use technicals and the fundamentals to figure that out. And I don't think a lot of people have the special sauce to figure those combinations out. That's where I think I excel at least as an investor. It's identifying the opportunity early and then finding the special sauce of the vehicles and the companies to put your money in. And then looking at SILJ versus the NASDAQ. And when this goes down, SILJ is going to outperform, and we are just breaking out. We're turtle heading out of the pattern right now. What does that mean? means Silj is about to rip. We just ripped Friday. Everyone noticed that. Um, if you are an early investor, if you've been part of the website, we are already positioned in it. We are positioned in it because we know the leading indicators before this breakout that was occurring. We know what to look at. We know silver has broken out of its handle. We know that the yield curve is starting to uninvert, and that is when gold and silver starts to outperform. We could see that from October of 2022 when it started to break higher on gold. And then later 2022s and 23, it became far more obvious. The yield curve was starting to uninvert to some extent, and liquidity started to go up recently. We're in that part of the cycle where silver is going to RIP rip. And these are all interconnected. These charts interconnect with the cycle of these charts here and this chart here and this chart here. They're all interconnected. Money starts to rotate differently and it goes to the sectors that are about to outperform. We are just really early in that rotation. Here's platinum ratios. Now, platinum is incredibly cheap. I've been buying it and accumulating it. It doesn't mean it can't get cheaper here in the short term against silver. The market conditions are what is going to determine this. Silver is right at its prime to outperform platinum. So I don't think platinum will necessarily go lower, but I do think that silver could go higher in the short term at a very fast pace. And I do think we could get a false bottom. But guess what occurs there? If I can take 1 ounce of silver and I can get, let's say it dives down to like 25 or even 20, 1 ounce of silver buying or 20 ounces of silver buying 1 ounce of platinum is a steal. Of course, I'm going to take advantage of that if it gets down to that level. And I think it could because the market conditions for gold and silver are right now. The uninversion, the yield curve, all that stuff. Platinum trades with oil and it's more inflation sensitive. So in the short term, we could see silver do some blow off top. And if it gets really low against platinum, I am going to laugh because I can get an incredible exchange rate for silver against platinum if that transpires like that. Even at 30, it's an incredibly good deal. Here's gold versus platinum. We're at 0.4, so gold's outperforming. That is a signal of where we're at in the market condition. We're very early in this stage still. And then when the inflation comes, 98, I think we're going to come and outperform on the back end. Keep in mind, though, that there is forced buying into gold, maybe not so much into platinum at this time for these countries. Keep that in mind, too. And then you've got palladium versus platinum. That's already bottomed out and starting to outperform for platinum here in the short term. And I think when the inflation comes, that's when we'll see a huge outperformance. So just because it's cheap doesn't mean it has to turn immediately. Just want to make sure you guys understand that. Please see my bio. None of this is advice. So AG, someone is absolutely screwed. The silver squeeze on this is going to blow minds. The following is the mid-tier silver miners ranked as a percent of their short positions. The size of these are twice historical norms. And these are some of the most shorted companies in the silver space in terms of short positions as percent of float. First Majestic, Endeavor Silver, O'Hara Mining, Pan American Silver, and Hecla. It says these are crazy. And he's just talking about the percent short. So there's a lot of short. When this rotates against them, the shorts have to cover, and you'll get a short squeeze. So the squeeze on them is going to propel them up faster in a shorter time frame, is what this is basically saying, and which is true. Tommy says the party is only getting started. The largest dollar inflows in silver miners in the history of its ETF. Looking for fundamental growth, not in overall equities. It's in precious metal stocks. This is Silver Spot, and this is our Global X Miners ETF ripping in terms of money flows or total assets. It's coming, guys. Here's something. It says if you're a high income earner, you can't contribute to a Roth IRA. For 2024, high income or is modified AGI of 161 for singles and 240,000 for couples, which means you can't get tax-free growth unless you use a strategy called a backdoor Roth. You can do a backdoor Roth. You put it into a traditional IRA and then you transfer it over to a Roth IRA, which is still legal to do. You can also do a mega backdoor Roth IRA contribution, or you can do a Roth 401k contribution. What does that mean? If you have your own, you can do it if you're employed from a 9 to 5. You just have to do it after you stop working at that company because the company owns your assets, so to speak. It's a part of the company, the 401k is. If you're in a self-employed 401k, which means you are self-employed, you have a small business, it could be just yourself. And if you have income, you can do monster backdoor Roth IRA or 401k contributions. Right now, I think in 2024, and you double check this, I think you can go up to around $40,000 in contributions of pre-tax sorry, post-tax contributions into a Roth 401k and or a post-tax 401k, and then you roll it into a Roth IRA. Those are both legal, but you have to have a self-employed 401k or a self-employed 401k to transfer into a Roth or to go directly into a Roth 401k. That is available to those people. You can also do that at a 9 to 5, but you have to transfer it over after you stop working. So you will have to pay tax on that when you transfer it over. This is a way to do it before you pay tax up front and you just do it that year. Just an FYI. Gary Savage says silver is preparing the 5th test of a 3275 resistance. When this breaks, the ballistic phase will begin, and I think he's probably a little bit off because we're at 33 something bucks now. Kevin, so let's go to Kevin here. So Kevin says, and this is response, he goes, uranium, URNM, and commodity trading style, no technical system is perfect. But generally speaking, I've made most of my money following commodity sectors like uranium when I think it's entering in a bull market for fundamental reasons. In the early times, so then he goes in, but as the market gets euphoric extremes start to develop, large runs away from the 50 EMA, exponential moving average, or DMA, daily moving average, we can be well rewarded to take profits and reallocate to other commodity sectors that might be also in a bull market, but at an extreme depression away from its 50-day moving average or EMA. So he's just saying as these things get a little bit more on the expensive side, you can swap to better opportunities in other commodities at that time. And we do look at that at the website. I am not inclined to try to do this as much as maybe he is suggesting. I usually sit and don't trade. There are tax ramifications in taxable accounts if you do that. And a lot of the companies that I'm in pay pretty big dividends. So what I do is I take those dividends, sum them up, and put them in the best opportunities that I can find in the market, and I just ride it. I don't try to time distance above a 50 EMA or 200-day moving average. They very well could be right, but what I have found is it's much less stressful to just ride these things, collect the dividends, put the dividends in the best opportunities in the market, and just ride it. This fact is, big money managers do this, and retail investors get uncomfortable buying big spikes for good reason. Stocks take breathers. Sometimes there's explosive news that can keep a sector going, especially around breakouts. And he's playing the short term here. And I don't play the short term as much. Investment wisdom, it says, I don't believe in predicting markets. I believe in buying great companies, especially companies that are undervalued and or underappreciated, says Peter Lynch. We've got Dow Jones versus gold ratio says it all. It's starting to break back down to the downside. That's where your outperformance is, guys. Capital rotation. Grady says, been saying this is very good looking chart and said that the 2650 level is already back tested twice. So no need to go there again. And as expected, silver broke out this week. At the service, we're absolutely killing it. Do not miss it. Silver is breaking out. We've got a run move and then the projected move up to about $40 for that bullish, expanding, falling wedge as a halfway pattern. There we are, moving along with silver. Charlie says, spend less than you make and always be saving something. Put it into a tax-deferred account. Over time, it will begin to amount to something. I put a lot of money in my Roth IRA when I was young, and I made a lot of money in 2020 when I bought that bottom of energy in my Roth IRA. I am duplicating my efforts here in gold and silver and some of the junior companies, in even other accounts, in the Roth 401k accounts and stuff like that. I opened that up. I'm sharing that on the website. If you guys want to see what I'm buying, I'm sharing that on the website. You can see it. So you can see me build that Roth 401k. Kevin says the bottleneck is commodities. So we're talking about artificial intelligence. AI. So let me just sum this up real quick. I was in manufacturing. That's what my degree is in, manufacturing engineering. And what I do is I increase the efficiency of the throughput of manufacturing facilities. We do that through continuous improvement projects, through capital, through equipment, through processes, labor, all that stuff. If AI comes into the mix here, which it looks like it will, what it's going to do is it's going to shorten the lead time of the design and of the production of producing things, which means the intensity is going to increase on commodities because the companies become more efficient at turning commodities and energy into usable products. So that's really what manufacturing facilities are. They use energy, they use commodities, and then they transform it into a usable product. So he is stating the bottleneck is commodities. You can print raw materials. It says you can't print raw materials. The demand on commodities is unparalleled in human history. Pull up a chart of your favorite commodity and expect its inflation adjusted highs to be met and exceeded. My great love remains silver at this time, as I see it being a particularly critical importance for solar and new solid state battery technology, which is at 1 kilograms of silver in the Samsung battery there. Plus, it's destined to be hoarded once again as the poor man's gold. $75 an ounce is a layup. And will send the silver stock screaming higher, but $200 an ounce is in the cards, bull market, and will deliver life-changing fortunes. Completely agreeing. We're talking about AI is what he was talking about up here. And I wanted to, because I completely agree with this. When I was thinking artificial intelligence and what that could do to manufacturing facilities and the supply chains and all that stuff, and reducing the lead time of design, you're just going to stress the commodity group more. And in fact, all wealth in the system would then transfer to the ownership of commodities because AI is going to, I think, could dramatically change the way that companies operate. And then eventually, if you can 3D print and do things like that, you can just, you need the ingredients to make the final products, and then AI can figure out how to 3D print it or do something on the lines of that. Here's another one. He says, I see an exciting future with huge tech developments, amazing new electric vehicles, robots, and AI everything, all of which requires massive investment in power infrastructure, copper, lithium, silver, molybdenum, uranium, met coal, etc. We are at a point where robots can make robots. And that is true. And again, the bottleneck is commodities at that point. We are in such a great opportunity, guys. Now, here's another thing to think of. What commodities are going to feed these manufacturing facilities or whatever, these robots? Well, you're probably going to have the main factors. What are the most important commodities out there? The number one commodity is oil. Oil is going to be the number one commodity. It's in paints, lubricants, it's in plastics, it's in all sorts of stuff. It's in obviously transportation and stuff like that as a fuel. So oil is going to be number one, silver is number two in terms of its uses for designs. Then platinum and palladium. And I don't think people think about this. You can dope platinum and other materials together to make materials that conduct electricity and increase robustness. As artificial intelligence becomes more and more advanced, it's going to require, we'll call it exotic materials, in my opinion. And platinum and palladium, along with rhodium and some of these other platinum group metals, are exotic materials that can push the boundaries of technology and design. And if AI is going to push those boundaries, you want to be involved in the things that will feed that envelope of design. So that's kind of where I'm at with my investments. It's like, well, where is the puck going to go? So, that's the Wayne Gretzky quote that everybody talks about. Go to where the puck is going, skate to where the puck is going, not where it's at. But I think where we're going is we're going to start to push the boundaries of things. I'm sure we'll get graphene or other things out there as well. And these materials that are incredibly robust, I think will be incorporated into a lot more designs. And that includes the platinum group metals. And they are cheap right now. They are dirt cheap. Investment wisdom: you are neither right nor wrong because the crowd disagrees with you. You are right because your data and reasoning are right. And it's not just that. You're right when you get the expected return from it. I don't want to be right for the sake of being right. I want to be right and have some sort of financial reward from it. And that's where the technicals need to come into the fundamentals. The fundamentals, you can be right and still not get a price go up. I want to be right and I want the price to go up. I kind of want my cake and eat it too. The latest 401k data was released. Here's the average 401k balance by age. 25 to 34 is 38,000 bucks. 34 to 44 is 91. 45 to 54 is 169,000. 55 to 64 is 245, and 65 and up is 273,000 bucks. How do you fit within the average? Now that's the average. The median is a lot lower than this. The median's the middle number, or not median. The mean. No, yeah, the median. It's the middle. Median's the middle. Mean's the average. So the median is in the middle. The median's going to be below this because there's people who've got a buttload of money in their 401k, skewing the average to the upside. Yeah, I said that right. So Schlumberger, they're one of the larger energy service companies. What their opinion is, long cycle growth has been untouched by lower near-term prices. Offshore is a growth engine going forward. Right now, there is a lot of offshore that is at very good pricing. And again, if you guys want to know those companies, I have it in the community on the website, and I'm going to be buying some of those companies here soon in the future whenever they turn and start to come back up in my Roth 401k. I will literally show you those companies, buy them in my Roth 401k right at real time, and you can see me put those on the website there. Patience pays off. Silver just made a new 14-year high, trading above 33.25. The opportunity to buy below $30 an ounce is likely gone for good. But the opportunity to buy below $40 still exists, but not for long. Gold also hit a new record high today, above $2,720. Liz Ann says factory production slipped back into negative year-over-year territory in September. Has been norm lately for continued switches from negative to positive and vice versa. And there's the swings in these production. And generally, these are associated with recessions. So how are we not in a recession if we are negative here? They just redefined it, and then all of a sudden they're printing a bunch of money and doing all this stuff, fiscal spending, to try to hold this up. Pretty much. Brandon says, I'm roughly 100% vested in precious metals, junior developers, and producers. Yet I feel like I'm underexposed. Gold is mooning, silver looks like it wants to follow. But the juniors are trading like we're in a PM bear market. It's unreal. What I said, you are early, young grasshopper. This is what it feels like. And we were in here early back in 2023. I had invested money in some of these, and you just buy stuff when no one's looking, guys. That's really what it is. You buy it when no one's looking, and then when everybody's looking, it goes up a lot, and that's generally when you want to sell, is when it becomes overvalued. So that's what we've got there. Here's the S&P 500 going on up. You can see the commodity bull markets, and I think we have entered one. I've got 2021 as the potential turning point. I think 2021, even though it's gone up a little bit, I think we're going to go sideways here for a while. And that's that capital rotation. And Charlie Munger's recipe for getting rich: curiosity, diligence, analysis, courage, prudence, and patience. This is the one that most people struggle with. Patience. Patience, patience, patience. He says a few major opportunities, clearly recognizable as such, will usually come to one who continuously searches and waits. With the curious mind that loves diagnosis involving multiple variables, and then all that is required is a willingness to bet heavily when the odds are extremely favorable, using resources available as a result of prudence and patience in the past. There you go. But that's where I'm going to end it, guys. That's what I've got for today. Give me a thumb up, subscribe to the channel, subscribe to the website. We have a question and answer session today, 5 p.m. Mountain Time. Go on there, sign up. We can have a discussion about all of these things. I answer your questions. I am going to talk about risk. I'm going to talk about hunter bagger potential possibility. I'm not talking about individual companies. I'm talking about the mindset that it's required, the opportunities, what those opportunities look like, and then when you have to bet when everyone else is not betting. That's how you get hunter bagger potential. Doesn't mean you will get it. Potential of getting it. And I think we've got some, hopefully, in the portfolio already. Fingers crossed. I've got a good. So I've got about 10 or 11 companies that are up. They've been going in and out. Depends if it's up and down. They've been going all over the place. Somewhere around 10 companies that I'm already up over 10 times. My biggest is up 26x, I think. Now, that just needs another 4x, get to 100 times. That will be my first hunter bagger if that turns into that, and I think it will. I think it will go way past that. It could potentially be 1,000 bagger, maybe. Fingers crossed. I think it could 10 bag again. It could be a 200. It could be yeah. We'll see. We'll see. We'll see what happens. But I can show you guys the characteristics that I look for, the risk and reward, the risks that were there with the sector, the companies. And then you can identify it, I think, for future companies. If you want to take on that risk at the beginning, which I did, and I spread it across some. And I can tell you the characteristics of the companies and what they do with the money to get you to the levels that are up there. So if that interests you, type in the Mayday coupon code, MAYDAY, one word. You can try it out, 50% off the first month. Then you try it out, and you can always switch to the yearly membership at discount too if you'd like. Use that Mayday coupon code. That coupon code might change here. I might change it because Halloween's coming up, and I'm going to probably do Halloween as the discount code when we get closer to Halloween here. We're also going to have Black Friday specials out in Thanksgiving, probably with the monthly membership. I'll keep the yearly membership the same, but the monthly membership might have a little bit more of a discount if you want to try it. But right now, 50% off and the opportunities that you have today, I would get in there because the opportunities that are coming, they don't last forever. They do shift from sector to sector over time. But what we've been doing is we went from 2020, which is a very low spot, we went upward, and then we pull on back. And that low spot that I would say some of the areas that we're in today, we're hitting another kind of low. they're not going to go as low as the spot before in 2020s. And then there was other sectors that were really low in 21, 22, 23. Like energy service was really low in some of those areas. And we just pick off whatever's cheap. So if you're interested and that's kind of the investment style that you want, these are not short-term trades. These are investments where you invest in it, ride it for some years, and then you're playing the big move. But if that's what you're interested in, I can definitely help you guys out. But that's what I've got. We'll catch you at the question and answer session later on today. All right, guys. See ya.